there were lots of rumors about waiting until supplementary budget is passed again for the third time. But it's more about time being the essence. They lost a lot of jobs in Korea in the last few months, and waiting for a month longer would have actually hurt the business sentiment, which could have actually been avoided by cutting today. So I think it's perfectly in line with our views that they had to cut today rather than waiting until the next few months.
Right, fair enough. Waqas, I know you're not a market analyst, but I do want to understand from you the divergence that we're seeing in the equity markets versus the currency markets, because typically they move in tandem in reaction to a rate decision or a stimulus announcement. But what we're seeing is a stimulus fuel rally in the equity markets, which has taken the Kospi 40% off, or rather 30% off from recent lows, whereas the currency, the Korean won, is under tremendous pressure. One of the badly hit currencies for the year, down 7%. So what is it that the currency market is really pricing in terms of the downside to the economy from these levels?
The currency market is a bit more nuanced, to be fair. It's not just about the domestic concerns. It's also about how dollar itself has been a safe haven in the past few weeks and months. So it's more about rushing to dollar itself as well. Having priced in, yes, cuts, but you'll also be expecting more Bank of Korea, more easing from Bank of Korea in the next few weeks and months as well in the form of liquidity. So yes, while this is helpful for the corporates, you will see more gains in equity markets. The currency itself is actually going to be losing ground even further.
And Waqas, the expectations for additional liquidity, expectations for this third supplementary budget has helped sentiment as well. It does make me wonder, though, I mean, what are you forecasting in terms of the real impact on growth? Because there are still some question marks over what extent demand will pick up, not just domestically, but primarily externally, too, if you look at the export business.
Absolutely, because that's a key question about Korea. Even though they didn't go into a stringent lockdown like the rest of the world did, it's not just about the domestic consumption. It's also that the fact that Korea is a very export-reliant economy. So if the rest of the world's actually struggling, you can't expect the economy to do really well itself. I mean, just the fact that the economy was suffering even last year because of the trade war concerns is a reflection of that fact. This year, with global trade expected to tank, you can't really expect Korean external sector, especially a lot of the semiconductors, automakers, petrochemical companies, to actually stage a strong position this year.